Hello guys, welcome to today's session in Concept. Today we will be talking about mutual fund madness or tips how you can maximize your profit in investment. But before starting the video, if you are new here, you can go in the description. There is a link below. With the help of that, you can download and install Concept Wealth application. After successful registration, you will get some free tools that will help you out in your investment journey. At any point of time, if you guys are having any kinds of doubts or query, so you can contact us on this number and we will be there to sort your queries out. So let's start today's session, that is how you can maximize your profit, okay, when you are investing in mutual funds, right? So there will be certain points that you have to keep in your minds, okay? So for example, the first point, as we always tell you, to diversify your portfolio, right? So there should be a minimum number, okay, that should be in your portfolio. For example, you should not be having 30 to 40 funds in your portfolio, right? Similarly, you should not be having one or two funds only in your portfolio. So there should be a proper, you can say, a ratio of funds. For example, if I'll give you an example, if you are a 20-year-old, okay, if you are a 20-year-old, so at that time your risk capability is good, okay, at the same time you must be having good sources of income as well, right? And there is so much time left ahead you. So what you can do, you can just go with 5 to 6 mutual funds in your portfolio, right? And just make sure you divide this in a proper ratio. For example, you can go with one index fund, okay. Now this one index fund will give you a growth or a good return in a longer run, right? Similarly, you can go with one equity fund, okay. So one equity fund, it will be having a little more risk, but at the same time it is capable of giving you a good returns as well, right? Similarly, you can go with two large cap funds as well, right? So you can or in equity you can go with a small cap as well. So one small cap and then two large cap funds, or you can just divide one large cap and one mid cap as well, right? After that, what you can do, you can take one multi cap or hybrid fund in your portfolio as well, right? So you can see how you are diversifying your portfolio, okay. So that if there will be some volatility in the market or worst case scenario, okay, in that case you still be in profit, okay, or you will not be in overall loss, right? So this is the power of diversify. So just make sure you are diversifying your portfolio in a correct manner, right? Not over diversifying, but also not be having so less mutual funds in your portfolio, right? Okay, then we have to find like what is the expense ratio, right? Because when we are going for the passive funds and when we are going for the active funds, so at that time you will analyze there are certain kinds of expense ratio there, right? If you will go with the active types of funds, okay, in which there is a proper management, they are continuously buying and selling according to the market, they are researching the market, analyzing the past performance of the stocks as well, right? So at that time it will be taking good management fees from you and there will be good expense charges as well, okay. So there will be expense charges. But when you are going with the passive ones, okay, when you are going with the passive ones, so at that time there will be, you can say, low expense ratio, because there will be low management fees, low brokerage charges, okay. So you will not be paying that much, right? So just make sure when you are adding some funds in your portfolio, so you should be maintaining a good ratio of active as well as passive funds, okay. So don't go lonely with you can don't add passive funds only or don't add active funds only, just maintain a good ratio between them as well, right? Then we have review the fund performance regularly, okay. So you have to review your fund performance. You can analyze the performance of the funds that you have added in your portfolio, as well as at the same time you should also be analyzing the performance of your fund manager, like how he is performing, if he is biased towards a small cap or if he is only trading with index funds as well, right? So you should also be analyzing the fund manager's performance with your funds performance, right? Okay, so that was the third point. Now set longer term investment goals, okay. Now you should be you can say you should be setting the long term investment goals. Why? Because if you are planning for a longer term, okay, so there is a thing that will help you, right? And that thing is the compounding, right? That thing is compounding. Okay, that thing is compounding. Now for a longer term of period, you will be getting a good return, but at the same time, if you are investing a sum and you are getting 10% return in 1 year, but if you are investing it for the 30 year, so it will be, your capital will be getting compounded every yearly, right? So you will be getting good returns. Okay, so that is why you should be investing for a longer term. Okay, so just make sure you should be having some funds in your portfolio that you are holding for a decade or 2 decade or 3 decade, right? So they will provide you good returns in a longer run, right? And they will also be they will help you in achieving your longer terms goals as well, right? And then we have the, don't try to time the market, right? So when you are going for the stock funds, or you can say mutual funds, right? So you don't have to time the market like, I always want to buy at low, right? Or I always want to sell at high point, right? So because you can see, when you are going with a diversification, so even if you are not selling at a higher point, or even if you are not buying at the lower point, still you will be getting good returns, or you can say your overall cost will be averaging out, right? So you don't have to always go for timing of the market. Okay, just research the global market, just research the local market as well, right? And then at the same time, if there will be you can say, if the market conditions are good, at that time you can invest more in the, more in your portfolio or more in your investment as well, right? So I hope all these points are clear, and you have to keep in mind when you are going for your investment in mutual funds, and that will be providing you a good investment journey in your you can say, in your achieving in your financial goals, right? So I hope the concept is clear. I hope you got to know something good today. If you like the video, you can share it with your friends as well. You can share your views in the comment section. Thank you so much, guys. This is your trainer Ankit Singh Rawat. Have a good day.